Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, and it is at current 5:21 in the a.m. Eastern Standard Time. It is Friday. Happy Friday. Let's get to the stocks, ETFs that we're watching as we proceed into the weekend. Tomorrow, folks, we're going to go over best stock charts for the coming week. If you're not currently a member and you want to get free best stock charts for the next coming week, enter your email address on the website. We hate spam too. You will not be spammed. And best stock charts is where we do a quick overview of the stocks that I screen for, why I like them, and then with members on the week ahead commentary, which comes out on Sunday, we do a deep dive into our entry points, stop loss points. We also talk about the markets as well as where we think we're going in the coming week. What will our strategy be? So let's kick things off with an overview of positions that we closed out this week, as well as stocks that we're watching, as well as some members' stock chart requests. Let's begin with Cal-Maine Foods. We booked profits on Cal-Maine Foods. We bought it back here on this breakout. We sold the other day for a handsome profit as we began to put in topping tails. I held through the 21st, even though these topping tails here were saying, you know, you have some sellers above, buyers back here want their money back, and they are selling. Be careful. I held on the bullish key reversal, but on the 22nd, we flashed a bearish reversal day, and I said, first out, best out. Let's get out of here. Let's allow for a pullback. We did get a brief pullback. We did reverse yesterday, but we saw more topping action, more signs of topping tails. Do I think that this is a heavy resistance area to get through? No, I don't. I think that we will push through it. Ideally, we get a further pullback on Cal-Maine, and we re-enter the position on that pullback. And I would consider buying on a breakout here as well. Why am I so bullish on Cal-Maine Foods? Quarterly chart. Now, we have slightly more than a month left to go in the quarter. However, note on this quarterly chart how we are breaking out and above the upper band of resistance here. If we close here above this resistance level, we are going a lot higher on Cal-Maine Foods longer term. So again, I love the stock. I love the chart on a higher level view, meaning the quarterly chart, monthly chart, daily chart, a little bit of topping action. Let's allow for that pullback and then a re-entry on Cal-Maine Foods. Best Buy, I've spoken about this one many times in the past. We bought the breakout several days ago. We booked profits here on the 22nd as we leaned into the third standard deviation Bollinger Band in red. And thank goodness that we did, because we pulled back. Now, yesterday, we had a bullish reversal bar. I think it's quite possible that if the markets hold up here, we are going higher. Members, we may be getting back involved with Best Buy fairly soon, assuming that the markets hold up. Indicators look good. Stair-stepping higher on the Stokes. RSI breaking out, moving higher. Volume yesterday, pretty good. Best Buy, liking it. Steve Madden, bullish key reversal yesterday. We were long. We booked profits. We're looking to get back involved again. We cleared resistance here. You could see that we had some profit takers at the 58.25 level. How do I know they're profit takers? I know because there's no overhead supply above, right? It's never been this high in the past. So it's not overhead resistance, it's profit takers. RSI rising. Good volume yesterday. Love the setup here. Now, the other day on my last Swing Trading Today, and for those out there that are hypersensitive to political speak, I am political. I am truly political in my views, very passionate about my political views. However, I do not let ideology get involved with my commentary. But I will not ignore when a company's business practices are impacted by their own ideology. That is not a company I want to be invested in. I have a serious problem with it. I have a problem when actors talk politics and they have no idea what they're talking about. So if you are a millennial who is hypersensitive to any type of political speech that runs counter to your indoctrination and believe that any conversation with regard to Marxist practices that run counter to capitalism, if you believe that's a microaggression, fast forward or click off right now, because I'm about to get a bit political. But it has to do with the business practices and how it's impacting an individual stock. Now, the other day, I made a commentary with regard to a few of the FANG names, Google in particular, and one of the comments that was left on YouTube was from a viewer, Arnie, a gentleman, I will say that. He was upset by the fact that I called Iran a gangster country, and his wife, I believe, is from Iran. Listen, my issue is not with the Iranian people. It is with the mullahs, the handful of mullahs that run that country. And it's always with the governments when I refer to a country, not the people. I dated, my third girlfriend was Iranian, or she liked to be called Persian. So let's step back from taking this as a personal insult to individual people who are just trying to strive for freedom. And that's what the Iranian people are doing over in Iran. They want freedom. They're young and they want a Western lifestyle. But the mullahs will not allow it. I digress. I didn't want to go here, but that's to speak to Arnie a bit. Arnie, you're still a gentleman, and please keep watching. All right, but Arnie made a good comment. He said, you know, you're talking about Google on a daily chart breaking down. What about a weekly chart? And a fair point. But my point to him, or to the audience that day, was that the FANG names are underperforming relative to the S&P 500 and the Trip Qs. So let's talk about the triple Qs. Let's talk about the individual names, some of them anyway. I don't have much time this morning. The view from a higher level view being the weekly chart. So let's begin with the daily chart. Trip Qs, they attempted to break out yesterday. They were above, very close to breaking out here. Stokes rising, or beginning to rise, they're flattening out. RSI attempting to break out. We do have lower highs here. A bit of a bearish divergence. The Trip Q on RSI peaked out back here on June the 14th. We have made subsequent highs on price, yet RSI has trended down. So we have an indicator that is diverging. We also have, for that matter, Stokes, which is putting in a lower high, yet they are rising, right? So it looks as though we may have a recovery attempt here on the indicators. Now to the weekly chart. This is a fairly bullish setup. We're very close to breaking out here on a weekly basis. So I would make the argument that the triple Qs are very close to a buy signal. Not yet. They're consolidating. We have one trading day left to go. Let's see how we close out the week. A very tight trading range. Now let's take a look at a chart of Google on a weekly basis. This is the better of the FANG names, with the exception of Amazon. Google has a lower high, and we are threatening to break down to lower lows. I don't think that it's necessarily going to happen this week or next. We may, in fact, just break out if the Trip Qs break out. But if you take a look at a daily chart, it is not looking promising. You have a lot of sellers up here, selling strength. Watch for a break below 1204. If we get that breakdown, you have serious problems going on over at Google. And this is the better of the FANG names, with the exception, of course, of Amazon, which I've been saying I think is going to 2,000. I am still standing by that number. Now, names like Netflix, it can't get out of its own way. A double top, it's broken down. A good week so far, but we're pulling back off the highs of the week. Daily chart, yesterday it flashed a bearish reversal bar. No new daily low, but very close. And for those of you out there who are saying, you know, I understand why you're going over Google. I understand why you go over Facebook. What does Netflix have to do with ideology? Just look at some of their shows. I went over this the other day. Some of their shows that they have to finance or purchase, absolutely, you can't watch them. It's just propaganda. Chelsea Handler, Lisa Wolf, and so on. I'm not going to spend much time here. It's just horrible. It's absolutely horrible. Look at what Disney did with that last Star Wars movie. They destroyed a brand. So, anyway, the bearish reversal bar yesterday. Is Netflix down and out? Should we get a rally? We should. If we rally back and close near the highs of the week, I think that we could break out here on Netflix. But I think that it will continue to underperform the S&P 500 and the Trip Qs. Facebook, a disaster area. This is Facebook. Let's go to the weekly chart. This is a broken stock. And the problem is here with these companies is that they're so blind to their politics and how it impacts their customers that I don't even think is Disney starting to take it on the chin. But to be fair, at resistance. They're blind to how their ideology is impacting their business. They should not allow their ideology to influence their business. People get alienated, and I'll probably get a couple of disagrees or dislikes on this video, and that's fine. Leave a comment. Tell me why you disagree. I'll reply back. Arnie, I replied back to Arnie. He was a gentleman about it, though. And it was a pleasure to reply back, and most of his other comments are all positive, which they usually are. Moving on. Tesla. You know, we could talk about this stock on a technical basis. It's a basket case right now, and it'll probably get a bit weaker. I don't know whether or not this company is going to have a future. I have no idea. I think Elon Musk is definitely a genius. Do I think he's a good CEO per se? Probably not. I think he's a visionary. I think he needs to hire a CEO for Tesla. He's spread too thin. That's my anecdotal commentary with regards to Elon Musk and Tesla. With regard to the chart, it's quite, let's go to the weekly chart here. It's quite evident that this is a stock under tremendous pressure. We are holding within a trading range here. If we break the 286.13 level and close down below that level, in all probability, we're going a lot lower. We have lower highs on Stokes. Volume is good this week, assuming that we close up, and which we probably will, given the rebound off the lows. So would I be a buyer here? No, I wouldn't be a buyer of Tesla. To me, it's worth waiting for either a pullback and a retest of support at the 290 level with a stop loss just below it, or waiting for a breakout and a close above the, let's call it 370 level. Until then, I think that this stock is within a trading range. You can make money on it if you're trading the range. Other than that, I would avoid these shares. Let's get to Nugget. Now, the only reason why I'm bringing up Nugget is that I've been talking about Nugget, the gold miners, gold with members for the past several days. I've titled a couple of swing trading today's gold. Has it reached the bottom? Because we're watching it, right? And I've been saying that I do not believe that we're going to have a V-shaped recovery on the gold mining names. Take a look at the GDX. Also hit yesterday. Take a look at gold. We use the GLD. Hit yesterday. I didn't expect for this rally to continue to go straight up. What you need here is a pullback and a higher low to get put in, a base or a retest of recent lows. If you get that, and then you begin to rally up and through this week's resistance level, then that's a technical trigger for traders to say, okay, it's game on here to the long side because now we have higher lows and higher highs. So I view that this pullback here is an opportunity, assuming, of course, that it holds support. If it breaks down and makes new lower lows, well, then we begin the process all over again of bottoming out, rallying, pulling back, putting in a higher low or a double bottom retest, and then proceeding to new highs. You want that W formation. And it's good on a daily chart, but it's great on a weekly chart because you want that higher level view. Now here's gold. We've given up a lot of the gains on the week, but I think that we are far, far closer to a bottom on gold, the gold mining stocks, silver, than we are anywhere near to a top. Remember that gold is heavily shorted, historical short interest on gold. Let's segue now into the pre-market activity. Okay, let's kick the conversation off where we left off on the static charts. The pre-market activity on gold is good. It's up $3.60. And this is what I'm talking about here. Here's the bottom. Here's the rally. So here's our pivot point. If you want to see a rally kick off on gold, you'll want to see this pivot point here as reflected in purple, broken through. Because let's make the assumption that this is our pullback and our higher low. This would make for one sexy breakout. All right, so here you have it. Here's your pullback, a rally, pullback. Now the question is, do we break out and clear resistance and have shorts cover? Remember, historical short interest on gold. Or do we break down? And it'll probably be a nasty sell-off with the next stop being 1178. You don't want to see gold back down below 1180. It's very important that it stays above 1180. Or else it's going to be difficult to hold the 1178 level, and in all probability will come back down and retest recent lows. So gold this morning looking good. It'll look great on a close above 1210.60. Now, for that to happen, we really need the US dollar to break down. Now, I've been talking about the dollar with members, and I've been saying you can't expect a V-shaped drop on the dollar without a counter-trend rally. Now, the Chinese trade talks have broken off. No agreement reached. It looks as though the Chinese are going to wait until after the midterm elections to see how they pan out before they come back to the bargaining table. And they are not stupid. I think what they're waiting for here is for the U.S. economy to begin to play catch-up with their economy and their stock market, which is taking a hit. And why might they believe that the U.S. economy may play catch-up to the downside? Simply take a look at existing home sales yesterday, horrible number, and then take a look at the yield curve, 2s versus 10s. For those not familiar, the yield curve, which now all the pundits want to dismiss the yield curve. They quote it all the time, but now they want to dismiss it. Guys like Ron and Sana, the most leftist son of a gun on Twitter, and this guy's in the financial markets, dismissing the yield curve. It's predicted the last, on this chart anyway, the last 4 recessions. Yesterday, this is a monthly chart, yesterday we broke down to new multi-year lows. Now, there's not much you do here except for watching it. But once the yield curve inverts, you had better have your finger on the short button of the market because things are about to get pretty ugly. Because overlaid here in blue is the S&P 500, and you could see that each time the yield curve bottoms out, inverts, the Federal Reserve has to step in, and that's when the stock market realizes that, okay, we have a problem here. We're contracting, and the stock market rolls over. And take note of the candlestick. We have a bearish engulfing of July's move. Very, very bearish price action with only a few days left to go in the month. Back to the US dollar. The dollar did rally. We are consolidating. We recaptured the support level. If we give up the support level here, let's call it at 95. If we close back down below that level, this is a 4-hour chart, it spells trouble for the US dollar, because now we have another lower high and quite possibly a new breakdown to lower lows. And that will send gold higher. Let's take a look at the bond market. So this is a 10-year Treasury note. When it rallies, that means yields are on the decline. This morning, they are pulling back, which means that yields are rising. And we have a divergence here on 4-hour RSI, where the RSI is putting in lower lows and lower highs. The note has been putting in higher lows and higher highs. That is a bearish divergence on RSI, and we are now breaking down below support. Expect a rise in yields today, folks, and watch the Jackson Hole, Wyoming speech that Jay Powell is going to give today. And when I say breaking down, I mean along the support level, which we've been consolidating against, not against the lower band of the rising uptrend channel. Let's take a look at the S&P 500. Here's your line in the sand. It's quite simple. Here's your upper band of resistance, lower band of support. If we break down, I don't want to be long of stocks. If we break out, it's game on to the long side. The NASDAQ, consolidating gains here. We do have a lower band of support here. We have a double bottom setup, a W formation. We broke out of it. We gave it back up, consolidated, rallied back. We've broken out yet again, consolidating. I think that the path of least resistance remains higher here on the NASDAQ. But keep an eye on breadth, meaning how many stocks are helping lead the NASDAQ higher? Or is it simply Amazon, Apple? Is the rally, is the breakout broad-based, or is it simply being led higher, meaning the NASDAQ and triple Qs by a few large cap names? That's a recipe for disaster. That's it for this morning, folks. Again, best stock charts coming out tomorrow. Enter your email address on the website. We hate spam too. Follow me on whatever social media platform you're watching. Hit that bell on YouTube. Get notified of future videos. Everybody have a great weekend and a profitable trading day. Be well.